Good day, ladies and gentlemen. I'm pleased to welcome everybody to our webinar. Today we shall discuss questions devoted to application of personal composite instruments, or PCI, constructed using the GeWorko method. First of all, we shall give a definition of a personal composite instrument and its construction scheme. Standard financial procedures, realized through NetTradeX platform, will be considered today. We shall discuss buy and sell orders, spreads and swaps calculation. Competitive advantages of PCI shall be represented in relation to standard investment instruments. Here you can see some of them. First one relates to a conversion of an asset or a portfolio into the consumer's currency or some consumer's index. We shall show that the GeWorko method may help to optimize an arbitrage trading inside NetTradeX platform. Certainly, classic portfolio investment won't be neglected in our webinar. Several working examples will be demonstrated. Macroeconomic indices represent a new trend of PCI application. Example of US/EU relative index will be considered in this presentation, and we will show how it forecasts the recession of 2008. Finally, a short overview of PCI risks should be made. Next. Okay, first of all, let's introduce the concept of a personal composite instrument, or PCI. According to the official definition of IFC markets, PCI is a class of synthetic financial instruments formed by the expression of the base investment portfolio in units of the quoted portfolio. According to Reuters Financial Glossary, a synthetic financial instrument is an artificially created investment vehicle intended to meet requirements not met by existing conventional instruments. For example, they may be designed to reduce risk, to increase diversification, or to offer a higher return. PCI is a particular case of synthetic instruments created with using the patented GeWorko method. GeWorko has been developed in IFC markets in 2013. Here you can see a representation of the PCI price through the base portfolio B and the quoted portfolio Q values. I should remark that construction of PCI demands a realization of meeting obligatory conditions. These conditions state a connection between operated volumes of a base part and a quoted part. This relation is constant through the lifetime of PCI and is defined by initial prices of portfolios. I would like to remark again that PCI price is the relation of a base asset through the quoted asset if both are expressed in US dollars. Next. I suppose that the next question you may be interested in is an algorithm of financial operations. On this slide, buy and sell consequences of steps are represented. As I said before, volumes are defined by initial price of PCI, taking available funds into account. A next step depends on operation type. Let's consider the buy operation of PCI. Then, a second step corresponds to the sell of quoted assets and the purchase of base assets. After a position holding, the reverse operations are to be realized. In fact, a quoted portfolio plays a role of a currency, and a basic portfolio is purchased for the amount of quoted assets expressed by this relation. A yield of an investor is defined by a weighted spread and a broker's commission. Weights of PCI are expressed through the initial deposit and the PCI initial price. That is why PCI can also be called a generalized portfolio spread. Base and quoted assets are portfolios in general case. Next. Broker's commission consists of base and quoted commissions. It increases mathematical expectation of artificial risks in relation to standard instruments. That is why a use of PCI can be justified only if it gives competitive advantages of yield/risk relation in comparison to alternative instruments. Let's consider these areas of PCI competitive advantages. Next. In fact, they can be related to three groups: technical advantages, analytical advantages, and investment advantages. We shall consider each group separately with a count of PCIs from IFC internal library. First of all, I will give a short overview of considered advantages. It should be remarked that personal composite instruments can be constructed via our trading platform NetTradeX in several clicks. After a construction, all historical data of PCI is available online in the traditional form of bars or candles. You may also use a server-based trailing stop. Investors have an opportunity to construct personal macroeconomic indices, for example, US/EU index that has higher sensitivity to systematic shifts than trading indexes. You may also realize pair trading analysis of two correlated portfolios using traditional TA instruments integrated in NetTradeX. PCI is comfortable for investors who prefer to express portfolio in the local currency or some consumers index. Arbitrage trading and classic portfolio are easily realized via PCI class of synthetic instruments. Besides, a use of CFD elementary trading tools inside PCI allows choosing a bear or a bull trading style depending on the market mood. Next. Okay, let's analyze in detail a third group of advantages that is more interesting for investment purposes. The first application that should be considered is a consumer's conversion. In fact, it is the expression of an asset or portfolio in the consumer's currency or asset. This scheme of calculation is quite comfortable for asset holders who don't reinvest a yield completely. In this case, an investor is interested in the purchasing potential of yield. It can be connected with a course of a national currency or some national economic indices. Let's consider the first variant. If a national currency is strengthened, a purchasing potential of a base asset may decrease even if its US dollar price grows steadily. The currency of a conversion depends on consumer market. For instance, if an investor plans to purchase a real estate in the EU, it would be wise to use euro as the quoted part of PCI. He may also construct personal economic index closely connected with real estate prices. Another case. If investor has consumers' interests in resource-based country, a quoted index may include oil, natural gas, or copper. All these financial instruments are available through the NetTradeX trading platform. We may show a difference of classic and composite instruments for the American DJI, DJI in US dollars, and PCI DJI in British sterling pounds. Looking at H4 graphs, we may come to a conclusion that the purchasing ability of the index has opposite trend directions in relation to US dollars and British pound sterling. In this example, we use parabolic SAR to define the trend direction. However, you may experiment with your own schemes of analysis. According to the given comparison, a British citizen has to avoid investments in this half of the year. Next. In the next section, I would like to analyze the possibility of arbitrage trading with account of fundamental factors. In this case, a potential gain is defined by subjective conclusions. An influence of fundamental factors on stock prices can be estimated with account of quarter report parameters such as P/E, P/B, carrying value, revenue, and so on. A comparative analysis of two companies belonging to one market sector is more objective. It is connected with the fact that a number of coefficients don't have unambiguous interpretation of their absolute values. Example: P/E is the relation of a share price to the company's gain per one share. An absolute value of this factor doesn't allow defining the asset's value. At the same time, a comparison of PE for two competitors gives an opportunity to find out the undervaluation of asset with smaller PE in relation to another asset with higher PE. In the case when an investor uses a subjective evaluation of risks, this analytical advantage is important for arbitrage trading. A construction of PCI allows simplifying the analysis and decreasing fundamental risks. Let's consider an example of Google/Apple PCI for D1 candlesticks. We see that capitalization, revenue, and net income of Apple are higher. However, investors are not optimistic regarding this company because of increasing competition with device producers on Android platform. Accordingly, they do not hurry yet to buy the company shares. As a result, we see that Google growth of stocks, P/E and P/B are higher. We should take image losses into account after the death of Steve Jobs. Next. A more efficient attraction of investments results in more optimistic forecasts for Google. I should remark that probably Apple stocks will rise in price more slowly and fall in price more quickly as compared to Google stocks. You can see a significant rise of PCI Google/Apple in December and quite comfortable conditions for investment. Next. Now we move on to the analysis of a third GeWorko investment scheme, a classic portfolio. In this case, a fraction of funds invested in each asset is defined by the portfolio optimization model. The essence of a classic portfolio growth lies in funds' investment into assets of the growing market sector. In this case, diversification allows decreasing the yield or risk relation in comparison to any component. On the given slide, I have represented Capital Asset Pricing Model, CAPM, of the portfolio optimization. Here the yield of an asset is expressed through the yield of a corresponding market index and a noise component with a zero average value. A portfolio yield is represented through the yields of included assets and calculated investment weights. Two relations below express a mathematical expectation of a portfolio and variance of a portfolio according to the CAPM model. These equations allow optimizing weights for achieving a maximum relation of yield expectation and risk. This relation is called the Sharpe ratio. If we use three assets, a dependent of the Sharpe ratio on two weights is called portfolio profile surface. Next. This profile is constructed for the portfolio of three assets: ExxonMobil, General Motors, and Procter & Gamble. The given portfolio corresponds to a maximum Sharpe ratio and, therefore, is mostly attractive for investment. A history test of this portfolio allows achieving the attractive properties: 72% of an average yield per month and maximum drawdown of 11%. Next. Sometimes we need comparative fundamental indices to compile an investment portfolio. Using the GeWorko method, an achievement of this data became easier. Now we consider an analytical competitive advantage of PCI, an ability of personal indices construction. These macroeconomic indices can play the role of leading indicators on the eve of future macroeconomic systematic shifts. We may consider the US/EU index as an example. It is constructed with the use of US index and EU index relation. In its turn, US index was constructed by the combination of DJI and Nasdaq, while EU index was formed by German DAX and Euro. We intentionally have included European currency in PCI for demonstration of available instrumental variety. Next. In the represented chart, we can observe a delay between the first signal of crisis in the US and indices reaction. In PCI chart, the first signal corresponds to the beginning of the US bank crisis in August 2007 that provoked the world financial crisis. The US index reaction comes later in almost half of a year. A signal lag is connected with a curious effect. Dollar weakening leads to artificial inflation of assets. Their relative value increases, while their real value has begun falling in world markets. Therefore, PCI analytical instruments allows us avoiding an influence of artificial inflation or deflation factors. If these factors influence base and quoted parts of PCI, its sensitivity to artificial effects is lower in comparison to included parts. PCI can be used as a useful instrument for cash distribution in crisis period. For example, one of the actual problems is a fraction of deposit kept in stable currencies. However, let's go back to the represented relative index. We should remark that it becomes more efficient if it is combined with a correlation analysis. Next. In this slide, a linear correlation between US and EU indices is represented. This factor characterizes the tie-up of the two economies in the recession period and the recovering stage. Positive and negative values characterize direct and a reverse connection between evolutions of two economies. We've observed a close connection from November 2007 to February 2014. First of all, we should remark that most of data points lie in the upper half plane. Two economies are closely connected. However, a PCI application is instantly efficient when a correlation falls or achieves local minimum. Then imbalance can be used for the investment of base portfolio, while quoted portfolio is represented as a measurement instrument. For example, we can notice that correlation dropped in September 2008. This moment corresponds to its local minimum, and then a correction is observed. It shows a propagation of crisis into European markets. Initial US economy weakening could be used for PCI, US or EU sell position. We may use a correlated phase for hedging. A relative drop of this PCI is less sensitive to world market shocks than each accounted economic index. Next. Here we have represented a comparative analysis of fundamental factors, explaining a rise of PCI price since the beginning of recovering. As we see, all factors except retail sales confirm that the US economy recovers faster than the economy of the European Union. This effect is partially connected with a delay between economic driver of crisis and European markets. In the table above, you can see that the Sharpe ratio of US and EU is higher than one of US index. This curious property is explained by more objective risk evaluation in the case of the PCI application. Next. Statistical conditions of PCI efficiency may be tested using Sharpe ratio as it was shown above. If we define returns and volatility according to Markowitz's model, these conditions can be expressed based on linear correlation between base and quoted parts. We can arrive at the conclusion that the statistical efficiency of the PCI use can be increased if we analyze closely correlated assets. Mean return arbitrage strategies can be effectively applied in such cases. A numerical relation can be explained in a qualitative way. If the volatilities of base and quoted parts are closely connected, a local fluctuation of the quoted or the basic asset has less impact on spread value. There is less divergence of asset prices during strong volatility for more correlated assets. The width of a volatility channel, for example the Bollinger Bandwidth, is relatively narrow. According to represented relations, the volatility of PCI falls if a connection between base and quoted parts comes closer. However, we should recall that subjective fundamental factors, shown above, are absolutely not taken into account in this section. Indeed, we suppose that market is partially efficient. In this case, historical information doesn't define instantly its future conditions. We would like to recommend investors a combination of a fundamental and a statistical approach for a successful PCI investment. Also, I would like to remark that considered investment schemes don't limit the area of PCI applications. I am sure that future investigations will allow finding out properties of suggested schemes and new approaches to GeWorko investment. Next. Let me show some short conclusions regarding our webinar. First of all, PCI application allows making investment more comfortable due to consumers' indices input. Investors may use local currencies, personal consumer indices, and find out proper conditions for the market entrance. A portfolio construction and analysis is sufficiently simplified via NetTradeX platform with GeWorko method application. PCI is a flexible instrument of analysts. Personal macroeconomic indices allow eliminating harmful artificial effects like inflation and deflation. Relative indices, constructed using the GeWorko method, can be more attractive for investors. For example, they may have a higher Sharpe ratio. PCI analysis is more efficient if combined with correlation analysis and integrated TA instruments. Risks of composite instruments can be decreased by using assets that were highly correlated in analyzed historical periods. An investor can optimize potential gain or risk relation by combination of fundamental analysis and mathematical analysis. Thank you very much for your attention. If some fruitful ideas or questions come to you later, please use the following contacts.